My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month lead and tin. I'll start with lead. After clearing up the daily chart, at least a little, what we have left shows the market still keeping within the May to October 2020 bullish shift pitchfork. The key feature has been the weekly key reversal down at the end of February. This prompted a move down that saw the market close below the long moving average, currently at 1953 5 weeks ago. And we've seen prices move back up, but then seemingly caught in the attractor, that is the recent 50% Fibonacci line at 1967. Why have we gotten caught up here? Well, I laid out the situation 5 weeks ago thus, and I quote, "Below we have the low from December 2020 at 1929, the rising long moving average, the 50% Fibonacci line of the October 2019 to March 2020 move at 1915, and finally the lower time of the same bullish shift pitchfork mentioned above, as currently at 1928. End of quote. I also alluded to a possible scenario in the offing, and I quote, "Breaking one or more of these key supports may very well trigger another pattern to take place. But this time it would be bearish." I've alluded to this one already above. You see, there is the chance, just a chance right now, that the November 2020 today action could very well be a double top action. Very early so far, but the opportunity for one does exist. Look with caution on any venture lower, as it very well could be a trigger. That is where we sat these past weeks. We were sitting on a trigger that no one had pulled as yet until last week, when a bullish harami on the Monday, a relatively innocuous move, triggered the market higher, up through the short medium moving average, currently at 2024, the medium moving average, currently 2028, the congestion around the January high at 2039, until prices finally came to a sharp halt last Friday at the 50% Fibonacci on the June 2018 to March 2020 move at 2062. And that is where we have stayed, seemingly trying to push over it with strong and riskier patterns, such as today, where we could be on for a weekly key, a daily key reversal down. If we close tonight below 2036, then we'd be on. As I said at the end of my commentary last week, watch this space, as patience with this is wearing thin, and we are, after all, still within a large bullish shift pitchfork. Now that last bit there is worth remembering throughout. LME 3-month tin. The recent move back up was, as I pointed out 4 weeks ago, due to a bullish 2-day descending hawk pattern made again 5 weeks ago. When prices ran into the sand trap, as I called it then, of the huge congestion area dating from 2013 and also 2014 between 24,155 and 22,895, and proceeded to extricate itself out of it by moving higher. Its rise in prices and temporary falls has seen prices move back up in what has been an ordinary manner these past couple of weeks. 4 weeks ago I drew a bullish mid-January to start of March Andrews pitchfork, bullish Andrews pitchfork. Well, this didn't help at all, but the bullish shift pitchfork for the same period has. We're currently in between the lower time, that's currently at 25,115, and the middle time above, currently 27,500. Interestingly, the lower time has a partner, the rising short medium moving average, currently 25,035. So for now, this bullish shift pitchfork, especially between the lower time and the middle time, seems to be the bullish angle of attack of this market. Last week saw further support to this idea of a weekly key reversal up, though the follow-on has been, okay, rather than spectacular. The reason I suppose is that we are now testing the February congestion between 26,500 and 27,000. What happens now, whether we hold at these levels and maybe even form a double top, or instead try higher still to the middle time and maybe even to the July 2011 high area at 29,000. Well, that will be interesting to see. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.